I know it's lunchtime.
Thank you
We'll
so
keep
much.
it interesting. We'll get you to ask questions. So please, whoever wants to
Thank you.
participate can come in the front. There are very few there. Anyways, thank you, Samir, for giving us or me this opportunity to moderate a chat, and so wonderful to have you as well participate pretty much at the last minute. But thank you, Hitesh. Thank you, Mahesh. Before we jump into questions and set the context for the conversation, maybe very quickly you can introduce yourself, both of you, and also two power words which are there in the topic itself: value and maturing. So your take on what value and what maturing would stand for wearing the hat of ICICI Bank and Amicus Capital Partners. So Hitesh, over to you.
Yeah, so, thanks Samir and thanks Ajay. Wonderful to be amongst all of you. I manage, startup investments, innovation and innovation lab at ICICI Bank. Primarily invest into early stage startups, work with them, co-create products with them, and then use those products in ICICI Bank ecosystem. Uh, in terms of, the way I would, sum it up is, it's all about frugal innovation, right? I mean, the one of the questions when Sam Altman was here in India and somebody asked him that, can India build foundational LLM models? And he was skeptical, and his answer was that you're not yet there. And you've seen China coming out with their own foundational models at maybe 1/10 or 1/20th of the cost at which they build their foundation model. So I think we are very much there, and India is known for its frugal innovation. So I will sum it up that we continue doing the path of frugal innovation, and there are many examples like we have ISRO, right, which does in the space technology what budgets NASA or SpaceX would have spent. We were able to achieve that much lower cost. So India is all about frugal innovation. So I'm saying value capturing, either it is maturing or it is at early stage. I think it's all about frugal innovation.
So frugal is the word. Mahesh.
Yeah, a quick introduction. I'm part of Amicus Capital. We are a mid-market private equity fund that invests across 5 sectors, which is healthcare, consumer, tech, specialty manufacturing, and financial services. Financial services is a big area of focus for us. We expect to deploy about 30% to 40% of our fund in this sector. Typical check sizes tend to be anywhere from 12, 15 million all the way to 40 million. So that's a little bit about us. I think just answering your questions on value, I think, look, they mean different things. But for an investor, I think what we look for is capital efficient business models. Business models that where with our round of capital plus maybe one more round, we can take it to a liquidity event. So that's important, which means companies need good metrics. They're profitable. Path to profitability is very clear. So I think value in that sense, maybe one way of relating. Second way of looking at value for us is, how profitable itself is the investment, right? So I think that's another way of looking at it. So I think those are maybe some things that we associate with, at least from our side. What's the second one that you wanted?
Value and maturing.
Okay, maturity. So I think it's a continuum in my view. I think fintech entrepreneurs are slowly learning the game that there is a regulator, there is a box within which you can operate, unlike many other sectors. So I think welcome to the new world. Governance, compliance, all of them play an important role. So pay adherence to that. Otherwise, it'll trip you. So I think, you'll make mistakes, but I think that's a sign of the industry maturing, and hopefully a lot of people who thought that they can change the world by looking at your face and name and using technology, I think need to deal with the regulator. So yeah, that's something that you need to contend with. Compliance, governance are important aspects of how you build fintech businesses.
So I think, frugal is one, but the word that you use, continuum, I think it's a very powerful word, but also very relevant, because if you look at it from an innovation and a digital standpoint, I think the maturity is in realizing that innovation can never be kind of good enough. or what holds good today, probably even 3 months from now, you're not going to be relevant. So thank you for bringing it up. How many fintechs in the room? 1, 2? Who are the others? Okay, 4. Okay. So we have 3 very distinguished or 3 very different panelists. So Samir, digital fifth, running digital strategy for both big and small organizations. You have a bank and you have an investor. So if there were more fintechs in the room, I think it would have been good. But nevertheless, I'll come to Hitesh with my first question. In your view, looking at fintech and fintech innovation that has been taking place in India over the years, I mean, we have evolved catering to the underserved, driving inclusion. And how does this look for the decade to come? We did discuss about some points around the important role that the government has played. I mean, which is very unique compared to anywhere else in the world, where the government has kind of not just created the policy or the frameworks, but actually gone ahead and built out stuff or the rails on which innovation is happening. So whether you look at it from a standpoint of UPI, the account aggregator ecosystem, open credit enablement network, ONDC, all of that, and from your context of the frugal that you spoke about and the mass, and bringing in how innovating for underserved is one, but looking at the next decade, how are you seeing kind of this fintech innovation evolving further?
Yeah, so if we see, the last decade, it was all about, providing access to the financial services. While UPI, Jan bank accounts, creating DPIs to kind of get large population into the mainstream banking, it was all about, creating access for this population. Going forward, the way I would look at it is that, it will be all about how do you move from access to a true inclusion. And when we talk about true inclusion, it's all about how do you create products, solutions, which is not one size fits all, but it is more relevant to the customer segment which we want to try to cater to. Some of the innovations like account aggregation, hitherto, most of us used to struggle in collecting the data, right? And the cost in collecting data, many times you don't get the data on which you can actually, process and provide solutions to your customers. Now that is made, that is becoming easier and easier. So account aggregation is a constant architecture through which you can share information amongst the financial institutions with the consent of the customer. And at a fraction of a cost. This enables the collection of data on a fraction of a second, and now the banks or fintechs or NBFCs get more time to analyze that data. So large part of the time which used to spend on data collection, now that time and bandwidth one can use in data analytics. And that's where it will bring, the change in terms of how do you create more customized, personalized solutions in a quick, and your turnaround times can be more quicker. Other things are like, how do you, democratize lot of monopolies on the commerce side, right? So today, we have duopolies, like if you want to book a cab, you have either Uber or Ola. If you want to order a food, I think you have, Zomato or Swiggy, right? I mean, they're all duopolies. And that's where, what about the micro enterprises, SMEs? How do you ensure that they also participate and take the advantage of their entire tech revolution? So that's where ONDC is, doing a great job. How to provide the tech enablement at a very cheaper cost and get all the businesses which are in tier 3, tier 4 towns, and then make them mainstream and participate in the entire e-com revolution or tech revolution, right? So I think some of these are the initiatives which will go long way, and it will create an environment and a framework where we achieve the inclusion in true sense.
I'll come to you, Samir. So you've been on, so the reason I didn't go to Samir for the first question is because this is Samir's platform. So everyone should know Samir. And
best part is not many of you guys will know that we are not event organizers. Sometimes calls come that can you organize our events? We are not event organizers. This is the only event we do. We are consulting firm, work with bank and fintechs, building their strategies, journeys, process. A lot of big banks use us. but we are not event organizers, it's just one. So
It
the
is
problem
your
is every
IP.
time I do it, I get calls like that.
No. So, Samir, you've been on multiple sides, right? I mean, if you look at probably the first half of your career, you've been more on the technology or the IT services side, but then you've been with a bank, and now you're more of a business technology guy, like you say. So, if you look at it from that lens of innovation, wearing the different hats that you have over the years, innovation is not just technology, right? Innovation can also be in terms of the processes and many other things that actually go in operationalizing a business. How are you seeing business models now that you're on the strategy and the consulting side? How are you seeing business models being innovated upon, allowing them to actually scale and build a differentiation? Not just by using buzzwords like AI and blockchain and whatnot, but actually the business model itself creating a differentiation for the business, which kind of gives them the upper hand.
So maybe I'll talk on two terms, right? One on the fintech domain and then talk from bank perspective. So on a fintech domain, I think what I see maybe on a general basis is innovation for the sake of it doesn't matter. If there is no P&L model, don't even attempt it. It will not take you anywhere. Regulations are very tight. So my personal view is that independent B2C innovation is not possible. Okay, driven by a new innovative company. Let me classify that. So anybody starts new with $1 million or $2 million cannot do a B2C innovation directly as a B2C company. But yes, if you are a B2B company, you can innovate. I mean, a lot more guys which we see outside, including some of them just starting up, can bring tons of innovation, but that innovation will be driven to the market by the larger players like a bank or a larger fintechs. That's how I see it. In terms of banking world, I think the essence is, despite all the discussion we have had, the engagement levels on the onboarding side are still not great. So, to be honest, I'm not very big fan right now of innovation. I'm more a fan that if you can build revenue models, ensure that the people who are working with you can actually be happy and sort of scale up with them. Then just innovation, I'll be, so one of the reasons why I avoided all discussions on blockchain was there is so much of excitement. Even in Jaini, I see excitement, but I see business. This will be real because I think from an underwriting perspective or collections perspective, great use cases are getting built. So I think, I don't know, my answer is direct or not, but I just somehow feel that innovation is thoda bahut dar lagta hai. Because what happens is that and there's another bias we have is that any American says something, we start jumping up and down. Okay, we are racial by nature. So the moment somebody in US says something, we say, oh, Sam Altman bol raha, bolne dete na usko. I think he's trying to protect his own territory, right? Saying that India mein nahi ho sakta, he's protecting his own territory. India ne kar liya to mushkil ho jayegi na. So I think that my view is that if we can build from that framework, maybe from Indian side, and maybe innovative, right? UPI didn't come from US, nor did Aadhaar. So मतलब थोड़ा सा आज़ादी हमें भी चाहिए उस डायरेक्शन में सोचने की इंडिया का बेसिक थॉट प्रोसेस सोचेंगे तो इनोवेशन उसमें ऑटोमेटिकली होगा राइट इफ यू कैन डू इट चीपर फास्टर शार्पर एंड टू द राइट कस्टमर्स राइट दैट्स आल्सो अ चैलेंज राइट
But then you can have innovation on, there are a lot of well-funded organizations, fintech or non-fintech, who maybe 10 years back you didn't have a chief revenue officer kind of a position. Now, you can have innovation in business models which kind of unlocks different streams of revenue as well, right?
100%.
Yeah. So I'll come to you, Mahesh. I mean, we earlier were having two panelists who came from two different spectrums of investment, but because you do more of the growth stage investments, how have you, as an organization, seen the fintechs evolve, but at the same time, evolution not just from an innovation standpoint or a business model standpoint, but as an investor or investors talking to fintechs, their conversations around profitability, value-driven businesses over valuations, bringing in the sustainability side, I mean, sustainable growth aspect of it. So purely from an investor's hat, wearing an investor's hat, or from an ROI standpoint, what does the next wave of fintech leap in India look like for you? And what is the conversation that you would drive with founders that you would want to engage with?
Okay, I'm going to give you a slightly long answer. I'll start with maybe the journey of how some of these companies come to us, right? So you raise a seed round, you do a Series A round, and then maybe a Series B round, and then come to a growth capital fund. Now, fundamentally, what really changes in that journey are two, three things. One, you've proven the business model, you have some clients, but not profitable, right? So when it comes to us, the lens that we look at is very different. The question that we're asking ourselves is, I'm not looking at 500% growth. I'm not looking at building a unicorn. All we want is, can this company grow sustainably at between 30 and 50%? Profitably, and is there a way that I can exit this asset, when I say asset as an investment opportunity, in a 4, 5, 6 year time frame? And more often than not, I think we struggle to find an answer to some of those questions. Very basic questions. Can I exit this asset? The answer is no. Why? Because they are all doing esoteric stuff. Everybody talks about CAC and LTV and all nice things, but there is no bottom line in that, right? So it's like the old Maruti ad. Finally, you ask the question, right? Kitna deti hai? So I think you need to figure that piece out, right? You need to know what the bottom line is. And, most fintechs just, our B2B businesses struggle with overestimating the life cycle of partnering with a bank. A bank is a complex animal on the other side. So, you keep unrealistic expectations of saying, I'll just win this account, it'll be 5 million next year. Ain't happening, right? It's amazing, to see how complex a bank operation is. They get a notice from Reserve Bank of India every day asking them to comply with something else. They don't know where they're headed themselves. And you're trying to tell them, I'll change your life. It's not going to work, right? I think if I were to distill this very simply, when you're looking at a growth stage investor, you need to demonstrate a clear path to profitability and not in some adjusted EBITDA, right? We see all these fancy terms that say that I've capitalized this cost, I've capitalized that cost. Do you really make money on a transaction basis? So I think that's the first piece. Without that, I think finding growth capital investors is challenging. Two, everybody wants to IPO, right? I think today it's the flavor of the season, and I'm not going to bet against that cycle, but at the scale that you are in, I think you also need to think about how you're going to provide an investor an exit, right? And that's the second piece that we look for. Two very important things. Three, governance and compliance. I think startups come from an environment where I think there is so much of focus on growth that they don't focus on governance and compliance. And I think we struggle to tell companies to follow what the law of the land is. In the business that you are operating in, you will encounter counterparts that require you to be fully compliant. They are not going to engage with you or bring you on board if they feel that you are going to be the source of a lot of unhappiness and love letters that they are going to get from the Reserve Bank, right? I think that is a fundamentally important piece. The faster folks learn that, I think that it is better. So I think these are 3 or 4 parameters. I can go on and on, but I think it's important. The last one is, capital efficiency, which is an associated point, is that at some point in time, you need to be able to self-sustain at a certain level of growth. So how do you build that model without raising large rounds of capital and saying that I'm just going to focus on technology? Which goes back to Sameer's point on innovation. I think that focus your business on reducing friction in the marketplace. Find use cases that are realistic and relatable. Think of what I'd say is as sales cycles, especially on the B2B side, that are much, much longer than what you anticipate. And I'm sure you'll get to where you need to get to. Without this, you can build LLM, XLM, whatever you want, but I don't think you'll make revenues because think about it. You're dealing with a segment I'm just going to break this down, right? You have secured lending and unsecured lending. Secured lending, the guy with the largest amount of capital or the cheapest source of capital is looking to make a 3 to 4% spread. He's not going to pay 2% to you for you to do esoteric stuff. You need to be in the 5, 10, 15 bips so that you can be valuable to him and he can continue to make money. On the flip side, if you're doing unsecured lending, it's anywhere from 8 to 12, 15%. but there's a high loan loss ratio there of 4-5%. So they play with maybe 8-10%. OPEX is high, so you get maybe a 1-1.5% to play with, right? So the tech costs need to operate, or whatever innovation solution you provide, need to operate within these bands. And if you're going to provide a solution that is not efficient, cost competitive, reduce friction within these parameters, I think you're wasting your time.
Mahesh, I'll just continue with you. So given the stage that you guys come in, right? And you spoke about a lot of points, whether it is the sales cycle itself, the kind of innovation that you'd want to see. Where do you see role for technology to come into some of the operational areas, whether it is reporting and compliance and some of these areas? How important do you see technology playing a role there? And what are the things that were probably not happening a few years back, where you're seeing technology coming in, being a differentiator, which actually makes the company or the organization more stronger?
All areas, in my view. I think that's a very generic comment, but I'll tell you why I'm saying that. Because if you look at how the market has changed, 15, 20 years back, capital was a moat, right? It's not very easy for people to go in and raise 100 million, 200 million. But today you have a venture funded company or a fintech company that can raise $100 million like this. So then who are you competing with, right? I obviously can't compete with ICICI Bank, but I'm sure you can compete with the small finance banks, because they're all capitalized at maybe a couple of $100 million. So if you can raise $100 million, in a few weeks, then effectively you have destroyed that moat. So I think capital so what are traditional companies doing as a result? If capital is not a moat, what were they doing, right? So earlier, new entrants couldn't come into the space because of capital. You have destroyed that moat of the companies. So existing companies in the entire value chain need to be efficient all along the value chain, starting from either sourcing, in the evaluation stage, underwriting, in the collection, in the back-end processes at every point in time. It's all about productivity at the front end and the back end, and efficiency. Now, you can do many things. You can replace, so which means OPEX starts becoming an important issue, and that's the biggest problem. And trust me, the challenge for India and financial services in the next few years is not going to be fintech disruption and innovation. I'll tell you, it's going to be people. Financial services companies are dealing with high levels of attrition, 30, 40, 50, 60%. And every time you add a new resource, you're importing inflation at 30%. The business model is not going to support their ability to actually import inflation at 30, 40% with new incremental resource. So what do? Focus on OPEX. How do you do that? By using technology. Technology to underwrite, to get surrogate data, technology to process your applications faster, to be able to underwrite better, which means lower loan losses, collect better, streamline every aspect of that. So I think virtually at every point of time in the value chain, I think technology is going to play an important role for financial services companies to succeed.
So I'll just take a pause, and maybe we do one question from the audience before I go back to some questions. Yes, please. Can you just pass on the mic?
Hello, good afternoon. Thank you for that very thorough assessment of the market here. I'm speaking on behalf of the British government attending the summit today. It's fascinating to listen to successful Indian fintechs, what's worked for you, what hasn't here. I'm very interested to listen to access to capital, some of the challenges you've had there, regulation. What my question is, coming from government, is obviously in Europe at the moment we're grappling with regulation for fintech as it's growing. We have to set a balance between safety of the sector, but also it needs to grow and be competitive. So how have you found the government policies and regulatory actions in India? And give an honest assessment, have you found them that they helped advance your progress when you were setting out, or did you find them an obstacle when you were setting out? Because obviously it's the environment that the government and the regulators create has to be balanced and correct. So give us an honest assessment of how you found your government and regulatory support as you started out on your journey. Thanks.
So, I would say in our country, our regulator is the biggest innovator. So all the innovations you see in the fintech ecosystem are all created on the digital public infrastructure, which has got created in last few years. If you see UPI, which is one of the roaring success in the payment ecosystem, is kind of brought in by the regulator. If you see the account aggregation framework, where it is easing out the sharing of data amongst the financial institutions, again brought in by the regulator. So we are blessed to have a regulator which is forward-looking and supporting innovation big time. The only caveat here is that people who understand so regulations are either black or white, right? There is nothing called gray. And if people start interpreting gray as innovation, that's a caution. So, the kind of framework we have, regulator providing sandbox environment, where you can actually try out your ideas, they're open to listen to policy changes. If you have an idea and, you try it out in sandbox, they will enable the framework to ensure that this idea is commercialized and it is available to the public at large. So, as far as, you are being transparent with your customers, you are not cutting corners with the customers you are serving and not taking any shortcuts. I don't think we have seen any challenge per se from the regulatory perspective. And the advice to some of the startup is, the challenge with the founders is that many times when you are building a startup, you are focused on building a team, focused on building a product, technology, raising capital from investors. In entire gamut of things, compliance takes a back seat. So my advice is that, hey, compliance is not something you will figure out after 2 years, 3 years of your journey. It should be the part of the culture. You built it as a part of the culture. It's the day one requirement. It cannot be postponed. You can't say that I'll build business first, build my team first, and then I'll take care of compliances. And the other aspect is that when you start working on a product or innovation and you run it for 6 months, nobody is coming and telling you this is right or this is wrong, doesn't mean that it is right. In your mind, you believe that, oh, I have been doing this for last 6 months, 12 months, nobody has questioned. It doesn't mean that you are doing right thing. So it's a continual exercise. You have to put your self to a test. Whatever products or services I'm building in, is it complying to the framework of regulations? And believe me, entrepreneurs who have understood regulation and people, so for example, what is the biggest challenge for a bank? Can fintechs take over a bank, or can fintechs compete with a bank? Those kind of statements we keep hearing, right? The biggest challenge, I would say, is when fintechs will start realizing that we need to embrace regulations. And when they start embracing regulations, there is no difference. Because it's all about trust. Why people trust a bank or an NBFC or a large organization? Because they are regulated. And when fintechs also start embracing regulations, they will be no different than banks, right? So my point here is that we have a very favorable regulatory and environment and a framework here in the country. I think it's all about how do we embrace, and how do we create that culture of compliance from the day one.
Mahesh, if you have.
No, I think that I have a positive view on what's happening in the regulatory side. Can there be more relaxations? Yes, the answer is always yes. But I think you have to look at it from the other side. I think we have a population that has extremes on either side. And I think for every deregulation or loosening of the regulation, I think there is a downside risk to the ecosystem, especially the gullible and whatnot. And I think the previous session, you've seen a lot of those come into play, right? So I guess it's a balance, and I'd say on balance, we're quite happy with what's been done. And there's more to come, I think, on the digital side, on the using the India stack. There's many more innovations that are happening. I think, while this is a fintech conference, I'm sure there's lots happening on the health side. There's, tying in some of the data. There's, lots happening on the SaaS side. So I think there's massive amounts of, innovation coming in using the digital public infrastructure of India. And I think it's only the tip of the iceberg. So you're seeing similar sandboxes now in insurance that have started to pan out. Hopefully, that'll follow what's been happening in the other parts of the banking and NBFC side. So positive overall.
Yeah, I think one of the points that Hitesh made is very relevant. I mean, if you went back 8 or 10 years, probably building in an area which was gray was seen as innovation, but you very soon realize that you have to catch up a lot. And that's why I think building, so some of the questions that I had lined up, I think pretty much have been answered in parts. I think to play catch up is very difficult. And that's the point that even Mahesh made in a previous comment, right? I mean, whether you look at compliance or many of those things, I mean, where technology can actually play a role, I think it is something which is necessary on day zero. I mean, you cannot build hoping that no one is going to come after you or because there is a gray area. And I think Hitesh pretty much captured it in terms of talking about, I think the regulator, yes, they have a role to play. They cannot kind of be standoffish or they cannot be kind of just open about everything. But as long as the regulator is playing the game by the year and open or receptive to kind of recommendations coming in from different quarters, whether it is in banking, payments, insurance, whatever it is, I think that has to be seen as a progressive regulator that you have on hand, which allows for innovation to kind of build and grow. Samir, I'll come to you with my next question. Collaborations and partnerships. I mean, this is a very often word used. It's often abused in several ways. In my view, I mean, when you're going from a 0 to 1, probably you're not yet there for partnerships. But as you keep growing, maybe a 1 to 10, the kind of partnerships you're looking for is very different than the partnerships you're looking at a 10 to 100 kind of a journey. So when you as a consulting organization, as a strategy organization, working with fintechs on one side, mid-tier banks or financial institutions on one end, and the large ones, when you look at partnerships or collaboration, what should either party bring to the table for the collaboration or partnership to really work?
So I'll take it from a B2C perspective and the bank perspective, somebody who's acquiring customers. So I think it's largely a distribution channel which we have to use that platform for. And we work with amazing number of clients which are on B2C side. And also a lot of banks here we work with on both sides, right? So I think from a fintech perspective, they are looking at some partner who can actually ensure that the B2B partnership and sales cycle is not running into ages, right? It should be in some finite. So we know that in India, if you want to work with in a B2B environment, there is a limited set of 8 to 10 partners or banks which are happy to work with you and not attack your customers. Remember, so they're looking at those partners. I think some of the speakers here are from that background who are really not eating away the partner. So they're looking at a bank which has sort of pro partnership structure. They also don't want to work with banks who are heavily competing with them in the same arena. So you would see a lot of partnership coming from, say, a federal bank or maybe a Suryodaya Bank or maybe many of these banks here who would not compete in their area. So therefore, it's easier journey for them. They're also looking at good technology, right? I think last thing you want is you build something and पीछे का technology नहीं चल रहा. अभी मैंने account opening का process डाला, video KYC रात में नहीं चलता. तो क्या करोगे बताइए? क्या करोगे? मतलब it's a waste of time. How do you ensure that data is shared in an appropriate manner? So sometimes what happens is, let's say you're doing HL journey and the partner is not telling what is happening inside. How would a fintech work and originate a HL lab where your backend is not able to respond and maybe your sales guys also don't know what's happening inside? So I think a lot of transparency on both sides is required. I'm not saying we should have a issue with data sharing. I'm not talking about data sharing, but status to bata do. कि status में loan दिया कि नहीं दिया मैं approval में गया कि नहीं गया. So I think lot of transparency on that, lot of scale up on the technology side, right? Suppose tomorrow I have a scale up on my business, will my bank really going to support it? And maybe a very critical part क्या आप अपनी मुझे स्ट्रक्चर मुझे मार तो नहीं दोगे? You're AVP, DVP, VP, SVP, EVP, and you are done, right? I mean, हर stage structure में आपको support unit. I think we were hearing from Rajiv saying that a big thing which they did was to bring for all partners very senior guy who could support. I mean, let's say Petal Bank has a fintech, a very senior guy, Sumut, who is joining the event as well, as a fintech partnership head, right? Which is amazing. So I think they are looking at that. Now, and from a bank perspective, banks are looking at fintechs who can scale business. I think, as I said earlier, innovation का ज़माना नहीं है. Somebody, if you come to me in 2016, 17, 18, innovation लेके आओ, मैं बात करूँगा. If today you want to talk to a bank, अगर 500 करोड़ का धंधा करने वाले हो तो बात करो. 100 करोड़ का धंधा करोगे, कुछ एजिलिटी दिखाओगे तो करोगे. They won't work with you if you don't bring business to it, because innovation कोई point नहीं है ना, कितने partners से काम करें. Every partner costs a bank technically inside, I don't know, I may be putting a ridiculous number on top, maybe $1 million. It is attention span, putting your technology, putting people around, putting product managers around, and what you get out of it is nothing. So you would need to throw, so they're looking at partners who can be agile and scale up. They're also regulatory compliant. They would want to work with those who are ensuring that they have their own technically compliance officer, data privacy is there. So I think utna dekh rahe hain, and yeah, and the maturity levels also. I think we are no longer in a world where in 2016, 17, a young kid from a college will crack it. I think largely cracking is done by people with, I don't know, 10 to 15, 20 years experience. And that's how the business is going. So very different environment in last maybe 10 years.
No, thank you, Samir. Hitesh, I'll come to you. So you did touch upon the power of trust and distribution that banks like ICICI Bank, and with a vast perspective on diverse customer segments as well, and wide range of products that you take to them. So from your lens, I mean, when you look at some of the points that Samir made, when you're looking at fintech partnerships and collaborations, what would unlock a real value to the customer base that an ICICI Bank has when it is actually evaluating a fintech collaboration or partnership to be really meaningful?
Yeah, so at ICICI Bank, we have always believed, in technology as the force multiplier for all our businesses. And we believe partnerships are a way of life. You can grow multifold if you work with the right partners and you create a win-win situation for both the partner, for you, and for the customer. So it's about, and in partnership also, you look at long-term partners which are in alignment with your value system. So for us, brand is the most important aspect, and we will never want to create an iota of risk on the brand and reputation. So when we decide to partner, I think that value system alignment is very critical for us. The other thing is that, in a longer term partnership, I think, which I think Samir touched upon, that we need to think of creating scale, right? Smaller partnerships will not kind of last longer. So when you select a partner and you select a problem which you can solve along with the partner for your customers, it has to be something which is really adding value to the customer. It is not just peripheral, right? Then it can self-sustain and go on a longer path. For us, I think the way I will look at it is that now the world is changing from digital first to AI first. Transaction-led innovation to more financial well-being of the customer. So today, UPI transaction, everybody, I think almost, it is percolated. We have some 40 crore people who are using UPI now, right? I mean, so it's well penetrated. I mean, obviously a lot more room to penetrate further, but I'm saying it's not about, making people do those transactions. It is now about how do customers, decide how to invest, how to save money, how do you create a financial well-being of a customer. And I would say on the product side, I would go by 3P approach, right? In terms of how do you create products which are personalized and not one size fits all. Predictive, where you are able to predict what your customers, basis the data of the customer, behavior aspects of the customer, what customer would want, and then proactive. before, and in lending parlance, we call it, let's say, credit by invitation or pre-approved loans. If you know your customer, why don't you, assess it right away and offer them and give them a list that this is all is available to you. You need not give us any documents, or you need not, we'll not ask any details from you. But basis of our understanding about you and your data, this is what we can offer you. So, so in terms of the partners, we look at partners which are, kind of hovering around these areas. And other major area which is emerging is the earlier, presentation talked about, the fraud. That's one big area where the financial inclusion or digital transformation or digital activation, one thing which can really, kind of create an impediment is this cybersecurity risk and the fraud risk. So while we are progressing at a much faster pace on this, but at the same time, we need to do a lot of education to, especially tier 3 and tier 4 customer base, where we are making them adopt digital, we are driving digital adoption with them, but at the same time, we also need to educate them in terms of not to share their passwords, not to share their OTPs, right? If that doesn't happen, then you will put them back. Once, one fraud happens, and it's not with them. Even if, like my father, if any of his friends got, defrauded, he will stop using the digital mode of, banking. So we need to all ensure that this is a big area where a lot of work, and this is an area where we are also looking at a lot of partnerships where, and then other areas are like where you get industry level platforms, like for example, credit scoring. Today, if I talk 20% of the population, in the adult population, let's say, we will have credit scores, still 70-80% of the population doesn't have credit scores, right? Big area. Someone who doesn't have a credit history is not a good credit buy or a good credit, you can't give credit. Answer is no, but you don't have that enough of, data analytics which you have built. So I think that alternate data we've been talking about for quite some time, but there's no such alternate data bureau which has come into place and which can actually help you to, when we talk about financial inclusion, I think that's another important area, right? Where that's an area we are looking for. Plus, a lot of digital public infra which gets created. I think we are very keen on, building some of this digital public infra along with our partners, like we did, with one company called IBDIC, which is Indian Bank Digital Infra Company. We are building a lot of public infra for the banks and in partnership with the startups, fintechs. ONDC is another such example, right? So these are the areas where we are keen to partner, and idea is to kind of create partnerships which are in alignment with our digital roadmap, with our value system.
So now we have a lot many more people than when we started. So how many fintechs in the room now? Anyone? Come on. Who is selling to whom over here? There's like.
So we have higher presence of bankers. How many bankers here? Yes.
More bankers.
So if you're building anything that is predictive, it is personalized, and it is proactive, you need to talk to this. But unfortunately, there are only 4 fintechs. So I'll come to the last question. We talk of next big leap. I mean, 3 big words, but in a very simple one line, if each one of you could explain what next big leap would mean for you. Maybe we start with you, Mahesh.
Okay, I don't know whether I can answer this question effectively on the next big leap. Look, I think the next big leap is partnership. I would say that, because collaboration and partnership, while I know we've spoken a lot, I think in the industry that we are in, it's highly regulated, and I'm sure Hitesh wakes up every day, or his bank wakes up every day, trying to figure out how they can solve those problems. They cannot do it alone. They need partners, but they need solutions that are compliant, scalable, and cost efficient. So as long as you can solve for a partnership with these 3, I think you'll be very successful. So partnership is the way.
Maybe I wouldn't go into what it is, but maybe from a founder perspective, anybody wants to build a company, it is damn difficult. People are not telling you the truth. It is ridiculously tough to build it. If you join a startup, go with the idea that you will also have a very, very tough time. A lot of times there is a mystery out there that there is a BMW made available and all of that. That era is gone, but that still sticking on. You are part of the revenue generating activity there. So if you go there, डोंट गो विद द मिथ दैट वहाँ पे बहुत मजा आएगा. मजा किसी में भी नहीं आएगा. बहुत टफ काम होगा. कैसे?
I think,
अरे बहुत टफ काम है, right? I mean, just
I think he's waking everyone up from their afternoon lunch, I think.
Samir writes a lot about it on his LinkedIn post. So if you don't follow Samir, you should follow and read some of the posts that he has put. And from a guy coming, probably he's maybe 2-3 decades of experience and then building and still writing things as they are. I think there's a fair bit of honesty in that. But Hitesh, over to you.
Oh yeah, I think it's all about, so as I said earlier, right, it's about true inclusion. When, it's not about only enabling transactions, right? We need to also create a lot more awareness in terms of how do we bring financial well-being to the customer. And that can be done by, putting a lot of your content in vernacular, vernacular content so that people can understand. You can create your apps, your digital properties, on voice-based accessibility so that more and more people can use it. The other aspect is, innovation. When we do innovations, it should be considering that governance and responsibility. These are the two important aspects, when you do innovation. So keep those two things in mind. And the third, again, as I mentioned, we are moving from, enabling transactions to creating a more wholesome experience for the customer. And that's where it should now move from digital first to AI first.
Cool. Thank you so much, all three of you, for being wonderful panelists and taking the questions. And also, I was able to sneak in one question, so I think we are good on time. But we can do one question.
I think we are running
No, I think
short
we're good
of
on time.
time,
So thank you so much.
Thank you. Thank you.
Thank you so much, gentlemen. Wonderfully chaired. Ladies and gentlemen, we would like to present a small token of our appreciation. Samir, can you please do the honors? Can we have a token of appreciation, please? For Mahesh, for Hitesh, and for Ajay, please. Thank you, gentlemen.